Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So as you know, I like to start the show with a quick lesson. And what I want to do today is talk about a lesser known pattern in MACD that I think can give us a huge advantage in trading in the direction of the trend. So let's go ahead and get into the agenda here. So I'm looking for a MACD divergence, but it's actually a reverse divergence. And the power behind this one is because it goes in the direction of the bigger trend. So you're actually, most of the time when people look at divergence, they're playing counter trend. They're looking at a stock that's been going up and it's not showing momentum confirmation, and they want to play it counter to the main trend. I'm going to show you a tactic that I think when combined with both ADX and another pattern that develops in MACD can give you a pretty good edge as to entering again in the direction of the trend after it's gone through a correction. So we want to use the zero line for this and keep an eye on that. We want to compare the peaks in MACD with price. So I'm going to go through that. I'm also going to go through how the ADX can give us a little bit of insight as well. Then we'll go through the individual stock requests that came through. So let's go ahead and get into this lesson now. Okay, so I've got a daily chart of HOLX up. I want to start out and discuss standard divergence first. So we make a move to the downside here. We rally up, and what I want to do is compare the valleys or bottoms in price and the peaks in price with the MACD. So MACD is making a new low. It's dropping down and making a new low for the move. And then we rally up and MACD rallies up. And then we go down and make a new low in price and MACD makes a new low, right? So we want to compare each peak and each valley with the indicator, starting with price and then using the MACD to confirm that, all right? And then we rally up this time and MACD rallies up as well, but then we make a new low here, and this makes a higher bottom, right? So we've got divergence in place. This is convergence, where they're in agreement, and this is divergence when one is doing one thing and one is doing the other. Now, the standard divergence is very popular. It's talked about a lot. And, you know, when we're trying to look for signs that the momentum is changing, and in this case, it really called a reversal. But you're not necessarily expecting this standard divergence signal to reverse the trend. You're going counter to the trend, right? We've got a bigger trend that's down and we're getting a counter trend rally. So I typically am only looking for either a move to the moving average or to the prior peak. That's usually what I'm expecting out of a standard divergence. I'm not necessarily looking for a major reversal out of a MACD divergence play. However, if we start to move up here and we go and we make a pullback and you make a new high in MACD and then we pull back here and then we make a new high to the upside, we get a little bit of a standard divergence again, right? We're making a higher high in price and a lower high in MACD. But watch what happens after that. So we've got this kind of benchmark low here, right? And if you notice, we make a bottom that's above this, but it's also above this previous peak as well, even though this is making a lower low. So we're dropping while this is not dropping, okay? And so that's kind of our first sign of a reverse divergence that's kicking in. Now, what I like to do is I will typically look at what the pattern looks like at that point. So if I'm showing a reverse divergence right here, I don't really see a pattern developing yet because it looks like it's in the midst of a consolidation pattern, as opposed to, like, these two lines are still really far apart. It just doesn't look like it's quite ready to get going yet. The other thing that I notice is that we've still got some distance between where the MACD line is and where the zero line is. Now, there are times where it'll just take off from here, but usually when that happens, we have a better setup in place on the price chart with the moving averages. It'll have a more compressed pattern, and it look like it's ready to reverse. The other thing that I'll notice is if we wait for another swing, now this does make a minor lower low here while this is making a lower low, but I'm looking at it in the context of the bigger pattern. And the bigger pattern is basically sideways to up, while the MACD pattern is really downward. And it's working off the overbought condition without really price giving back very much. So I still consider this a reverse divergence, even though we made a slightly lower low. So I wanted to use this as an example because it's a little bit different. The other thing that I would point out is that you know that you've got something that's a little bit more interesting from a reverse divergence standpoint when it happens right at the moving average. This is a rising 40, and we're coming back to that line. A lot of times you'll get a reverse divergence, a quick one, and it doesn't really show up here, but like where it's right at the 18. And then you know that you're probably ready for the next leg to the upside. But we finally got back to the 40 here. Now we're getting closer to the 0 line. And look at what else. The ADX line, which back here on the first one wasn't really low yet, right? And then we dropped down below both DI lines and we had a low ADX condition. We got very close to the 0 line. And we had a pullback to the 40, which is steeply rising still, right? So we have reverse divergence, low ADX pattern, and a 0 line reversal. And these moving averages are starting to come together. So that's kind of how I would use all of these different patterns together. One of the things that I teach in the course, my trend and momentum course about this pattern, I give people homework to go looking for this because it's a little bit harder to find. It needs more. You've got to go through and search for it so that your eyes are trained to find it. So I wanted to spend a few minutes touching on this again. It's a great pattern because it's in the direction of the trend. Where this is counter trend, we've actually turned the trend to the upside, and now we're getting a chance to play a divergence signal, right, where this is dropping downward and this is moving upward in the direction of the trend. So I find that to be actually a more powerful signal than the counter trend standard MACD. Okay, so let's go ahead and look at the individual symbols now. Just briefly, my services can be found at rabilstockresearch.com. If you have an interest in the individual package, it has about 2 to 3 reports each week, plus a special video for that package. And you'll also be enrolled in the trend and momentum trading course automatically. So take a look if you have an interest. Let's go ahead and get into the stocks now. Okay, I'm going to start out with the S&P and then look at the gold miners ETF and then move into the symbols that came through. So look at the S&P, and I want to focus in on just really mostly just the weekly and the daily. So let's start with the weekly chart because I think this is pretty telling, right? I mean, we had this major downtrend line break that everyone was watching for a very long time. We got through that. We came back down and tested this key level around 3,800 and then turned up from there. So what we've done is we've created, this is the one, breaking the downtrend line is the one, 2 is the test. And we know we have a pretty good test. We tested a prior support. We also retraced about 50% of the up move. And now we've moved up. To complete this, we need to take out this horizontal line and to make a 1, 2, 3 back to the upside and have more confidence that the trend is truly has shifted back to the upside. But during the process of creating this 2 and 3, we actually broke the new uptrend line that was in place. And why do I know this is an uptrend line? Because we made a higher low and a higher high. So we have a confirmed swing low. A swing low and a swing high, so we can draw our trend line in from that point. We broke that trend line, and now we're in the process of testing the high. So if we fail here and turn back down through this horizontal line, we have a 1, 2, 3 to the downside. So hopefully you guys can see we're in a transitional phase that is not convincing in one direction or the other right now. We're kind of caught, and these two lines are incredibly important. I think if we break this line, you have to assume we're going to do a full-blown test of these lows and put a lot of pressure on 3,500. If we get through this peak, then our next resistance, yeah, it's here, but we're probably looking at something more along the lines of 4,500 or something like that as a potential target. Now, here's one thing I want to guard you against. We do have MACD crossing above the 0 line. So if we cross here, we do have MACD basically confirming the trend. This is making a higher high with, it will be with price. However, we don't have a lot of strength in the buyers right now. The volume actually showed up really well at the low, but since we've been moving up, we have a declining volume pattern developing, and that has a lot of times that's reflected in this DI line. So if you notice, if we want to compare this peak to this peak with the DI line, and if you notice, this is pretty low. I mean, we're making a lower high here, and this is more like a double top. So something we definitely need to watch is as we cross here, do we see better improvement in the green DI? Now, let's go and look at the shorter term time frame because on a daily basis, we're coming up against this key level, right? I mean, this is pretty important. We've made a pretty substantial move. And if you notice on this leg, we had really good green DI. You see how this had a really strong move to the upside? Because there really weren't any retracements along the way. It was very strong pattern gaps, no retracements back, no overlapping price, just straight to the upside. But then since this point and this move to the upside, yeah, the MACD is showing the closes have been fine, and we're confirming on that basis. But if you look at the way it's done it, it went to a new high, gave it back, moved up, and then came back. And now look at how it's dropping again. The green DI has not confirmed. So we made a higher high in price, and green DI, which is a strength of the buyers, is not confirming at this point. Now, if we get a true pivot high here, where we close above the high bar, and green DI comes back down below 25, I think you have a lot of confirmation that we've made a interim peak, and that increases the likelihood that we're going to go back and test this prior low. So I don't necessarily call for, when we get divergence in DI like that, I'm not, and even with MACD, I'm not looking for a major reversal as much as a test of support. Because like I talked about in the lesson, this is a counter trend divergence, which just typically means come back to support. So I wanted to cover those two timeframes. I know I spent a few minutes on that, but I think it's pretty important to recognize what's going on. The fact that we're still in a transitional phase, we don't have a confirmed trend in either direction right now. We are just waiting. All right, let's look at GDX. Very intriguing pattern here, and let's start with the monthly chart because we came back to this really key level here. We broke it and then found support at the next key level and got a really strong move. We got back through that level and have kind of wiggled around it, but we're back above. Okay, and what that's allowed this 18 to do, it was declining here as we started 2022, and now it's starting to flatten out. If we can use the 18 as support on a reversal or a move back, any kind of minor pullback, and the MACD holds as well, we have to start thinking that things are starting to shift back to the upside. I think when you look at GLD, when you look at some of the individual patterns, RGLD, go look at FNV, a few stocks like that, they're showing even more strength, WPM in the silver area. So I like what's going on here. I think there's a pretty good chance that this pullback is going to hold. Now, what I'd like to do, I want to show you the daily and the hourly and how you don't have to necessarily guess. So if we look at the daily, we pulled back to a rising 18, all right? Now we got a little overrun here. That does not mean that this trade is not gonna work, all right? What that means is we probably need to be a little bit more patient. I bet it comes back down, maybe tries to make a push and then comes back down again. Makes a little bit more like a double bottom type of a pattern rather than just immediately emerging to the upside. The reason why I'm interested in this is this leg right here, and it's confirmed by a really strong ADX reading to the upside. Now, when you put that in the context of the bigger picture where we broke back above this key level around 30, and if we can create a pattern where we've made a move to the downside on the hourly, so let's just zero in on the hourly for a second. We made a move to the downside. We've rallied up. So we have like an ABC decline taking place. Now, there was a decent amount of overrun in the MACD. So what I would be looking for is one of these kind of 1, 2, 3 back to the upside, a move to the upside and break the trend line. And then I'd like to see a higher low form after testing this support. If we get that, I don't necessarily have to wait for a breakout, but if I get a nice setup where it holds that 2 and turns up from there, I think I would be pretty interested if that takes place at or above the 18 MA. Now, the reason why I think the likelihood is the way this is going to play out, it's going to move up and then it's going to consolidate back down and then turn up like this, and it might end up being a breakout pattern, is because we have overrun on the daily MACD, which means this is probably going to take just a little bit longer than you would normally think. But something I'm definitely watching because of the leg to the upside, the green DI on the weekly starting to kick in again. We've got room even to get back up to the 40 area to play it as a swing trade or a probe trade. But the bigger picture continues to improve, especially in the bigger, some of those leading stocks. All right, so I did get a few requests about some energy stocks, and what I wanted to do is compare to different patterns. All right, the first one is DVN. Now, I'm not saying that this is not still in a long-term uptrend. This is sort of similar to what I was just talking about on the GDX daily. If you notice, we came down and we overrun the daily 18, but that line is still rising and it's above a rising 40. So we're still in a long-term uptrend. But because this was a deep pullback, we have pretty strong overrun on the MACD, right? But look at this. This is very strong. Strong move to the upside confirmed by ADX. So I'm interested in this, but I know I can take my time. I don't have to be in a big hurry. I think this is going to spend more time consolidating before it's really ready to go. So we're running into a declining 18. How that reacts will tell us a lot, but I just have a feeling we're going to do something more along these lines in this stock. It's not timely right now. If anything, it's actually timely as a trading short potentially back for a test of this low. So I'm not necessarily interested in this right now. I don't think this is a leading stock in the energy. Let's look at CNQ because I think this is a totally different pattern. Now, if we go to the monthly chart, in fact, I want to zero in on this for a second. I do recognize that we have a little overrun of the 18 and we have a little overrun here, but look at the difference in this overrun. Look at what this is. This is a reverse divergence pattern. See, this is the type of reverse divergence that I like. Why? Because it happened right at a rising 18. If you notice in the example, that reverse divergence took place with the 18 that was flat and we were kind of breaking below it. This is more attractive to me. Now, it doesn't mean it's an automatic buy because what we have to do is go down to the weekly chart and look at what's happening on the weekly. We have a low ADX condition. This has been in a low ADX condition for a long time. We've been bouncing around the zero line for a while, but what we need is a breakout in this chart. If we get a breakout, I think that's a buyable breakout pattern just based on how this low ADX condition is in place and the fact that we have a very strong looking monthly chart. So what I really love to see is we're pulling back on the daily here is get this to break out above this 62.5, this most recent level here. These two peaks are basically the same as these peaks on the weekly. So if we get that, I would consider that a nice buy setup. Whereas the DVN, I think, has a lot more work to do. Okay, let's look at DAL. So when I look at the monthly, I don't really see anything that's all that attractive. We've got two moving averages going down. We've got MACD below the zero line. We don't have any strength in the trend at all based on the ADX. But it does seem like it's got pretty decent support at 30. So when I look at this, I see this pattern recently. We had a little bit of a minor reversal with a pinch play developed here in this pattern. And the way this was cupping around and testing the 18 as it was cupping around. Now, the only reason why I might be, if this were a stock that I were really interested in, I might consider playing this is because we have a flat moving average. When we have a flat moving average, you want to think trading range. Trading range would be support and resistance. So if I wanted to trade this because of what I'm seeing in price support and resistance, I could play this right here using the hourly for timing. probably getting in on this pinch play or something like that for a move back up towards this resistance zone. So there's nothing wrong with trading that way. I just think you have to know all your time frames, what you're up against, recognize that this is not a big turn right now. It's going to have to get through 40 before we have anything significant going on. All right, let's look at PCRX. We've got some action developing on the daily chart with new momentum coming into this. Does it have staying power? Well, there's a couple things that gave us some, this is a pattern out of my course. This is what I call a counter trend parallel lines, because the MACD is going in the opposite direction as price is basically forming like almost like a bull flag here, while this is going in the opposite direction. So I like that from a trading standpoint. And the reason why I would only consider it a trade is because we know we're just sitting in support and we've got a lot of resistance coming up on the monthly chart. We don't really have momentum condition in place on a ADX basis for a big move, but we could make a trading move. And I think this probably wants to work its way up towards 50. That's where the next resistance comes in. So you could actually look for a pullback on the daily chart to trade this up towards 50. Just make sure you recognize that's what you're playing for. Could it turn into a big reversal? I mean, it's possible, but that's not what I would be banking on if I'm putting a trade on at this point. Well, let's go back to HOLX, since it was one of the stocks that was requested. I really like the looks of this. Look at the monthly chart. We've been consolidating. We got pretty close to the zero line. We have no real selling strength on the monthly. And then we made a strong move off of this last support area. And in the process of doing that, we came up and tested. We kind of overran a little bit the breakout level, but we tested the 18 and successfully held there. And look at the momentum condition that's in place based on the ADX. So I like this pattern. I think you could consider it here off the daily. Again, if it survives and you can use some kind of a trigger on the weekly chart, on the hourly chart, it's probably going to be more of one of these patterns where we come back up through like that. So if it works out that way, I wouldn't have a problem trading this just based on the bigger picture. I like to have the bigger picture in my favor when I'm doing a trade. Even if I'm doing a swing trade off the daily, I like to have the bigger time frames working in my favor, having the wind at my back, because I know that the bigger time frames are in agreement. Let's look at OMC. So again, this is a huge breakout on the monthly chart. We've been doing this, hitting our head up against this level around 90 for a while. We've got green DI trying to kick in here. Got a nice pattern in the ADX confirming the high. The negative we've got in this is that we've run up for about 6 months. So it would be nice if this could actually spend a month or two just consolidating above the breakout area, working sideways. And we can kind of see on a MACD basis, not a MACD basis, on a weekly basis, this came down, found support. I mean, this was a good trade. Now we're up against this high. The MACD looks a little tired. The DI looks a little tired. Wouldn't be surprised if what we're hoping for on the monthly takes place on the weekly, and this spends a little bit more time consolidating sideways. Notice the big red bar that showed up on the daily chart here recently. That just kind of tells me that a little bit of profit taking place. We've got a little bit of resistance up there in the higher 90s. I think this needs a little bit more time. I would keep this on my watch list based on what's going on the monthly chart, though. Let's look at a few big cap stocks that had earnings recently and maybe gave us a little bit of a hint that they were getting tired. So if we look at Netflix monthly chart, this had this monster decline to the downside, and it just got way overdone. Look at how far at the low, look at where the 18 was. The 18's up at 500 and price is down around 200. Right? I mean, it was even under 200, I think. So we're looking at a 300 point, at least 300 point distance between the two. And look at what it did. It basically rallied up while this declined and it met up with this line. From this point on, about 3 or 4 months ago, I've been telling people this is really probably going to stall out, this move. Now, why wouldn't I think it's just going to reverse and drop down? Well, if we look at the momentum, based on the weekly chart, we had a move up here like this, which is what I was just showing you on the monthly, and it had decent momentum characteristics on the weekly chart. Now what we've done is we've broken the 18, we've broken the trend line, and now we've tested. If we come back down through this line, we have this 1, 2, 3 reversal at the 18-month. Now, I don't know that I'm banking on that. I wouldn't be surprised if there's a lot of support in the low 300s, so I'm not necessarily looking for this to roll over because of how strong of a rally it made off the low. Remember, this was an undercut below the 250 level, so that was a pretty strong move. Based on the recent action, I'm not expecting much upside, but I bet 300 acts as support. Okay, look at what's going on in Tesla. And again, we rallied up to a pretty strong resistance zone, something I highlighted to my subscribers. This resistance here is a pretty big problem. MACD came down to the 0 line. So now that we're potentially re-breaking the 18, I wouldn't be surprised if we have a deeper pullback coming in this. No rush to be a buyer on this decline. Thanks for watching the show. Feel free to reach out. My contact information is listed. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.